Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Today, our webinar's title is How to Spot the Tops and Bottoms of the Stock Market. So welcome, everybody. My name is Shin Chu. I'm the moderator for this session. So I guess, spotting the tops and bottoms will be a skill that many traders would want to master. But of course, it is always really hard for us to pick the tops and bottoms. So today, our speaker today will share with you what are her tricks or her strategies in identifying the tops and the bottoms of a stock market. As usual, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. So allow me to introduce our speaker today. And she is a licensed and experienced financial planner who is certified by the Malaysian Securities Commission Financial Planner Representative License and Bank Negara Financial Advisor Representative License. She is also a course trainer and public speaker at Financial Planning Association Malaysia and Bursa Malaysia. And she now serves as the president of the FPAM Johor chapter. Over 25 years in education, she has accumulated over 50,000 students and conducted over 200 large-scale corporate courses. Other than being a professional financial planner and educator, she is also a best-selling author who has published 6 books, not one, on investment and financial planning. And you could have come across her books on major bookstores. Her articles have appeared in financial magazines such as The Personal Money, Money Compass, and many more. And she's none other than Miss Pauline Yong. Pauline, good to see you here this morning.
Good morning. Hi, good morning, Shane, and everybody. Hi, a very good morning. So it's today is a morning webinar. So we are going to learn something very, very interesting today. Let me share my screen.
Yes.
Okay, so can you see my screen? Okay, thanks.
Yes.
So today's topic is on how to spot the tops and the bottoms of the stock market. And obviously this one, if you were to refer to looking at this title, you probably is wondering, is this a fundamental analysis or is it a technical analysis? If you were to look at this title, actually we can see this as more technically. Okay, so today's session is purely based on technical analysis. So I will go through with you guys how to identify the chart pattern. Okay, because it is usually when you see the chart pattern, it is very clear sign to you that you see that it is a top. And sometimes when you see the bottom chart, you can see that, oh, you form a W and then that is a bottom. So here, I'm going to go through the process. Before we identify the chart pattern, we must learn how to draw the trend line, okay, certain basic skills, and then some principles behind the chart pattern. Then only we look at some case studies, okay? Because especially when we are looking at this year, 2022. 2022 is a year whereby it reverses your expectation about the investment market. For the last 2 years, we have been in a pandemic, and then we have been in an investment environment whereby the government has been very, very generous in giving stimulus package. And it has been a low rate of interest rate environment for a long, long time, okay, for the past many years. But this year onwards, everything is changing. Okay, you can see that everything is changing. The investment environment, it has changed from a generous government to a austerity kind of a government, okay, whereby everything has to be looking at control the spending, reduce the inflation, and then to increase the interest rate. So this will be the trend. And how long will this trend be lasting? So we can see that this is just a beginning. This year is the beginning of this reversal of this trend. So how would that affect the stock market? Okay, so obviously we can see that there is some relationship, and but however, particularly from the technical analysis point of view, you can see the pattern. Okay, you can see the pattern whether there is any market top, and then if there is, when is the bottom. Okay, so all this can be done using the chart pattern analysis. Okay, so let me start my screen sharing here. So this is the today's agenda. We are going to look at the trend line support and resistance, the how to recognize the chart pattern, the chart pattern recognition, and reversal chart patterns. So this is the top and bottom, and then to confirm of the chart pattern and some case studies. So may I have a show of hand, or maybe you can type in the chat, how many of you have some form of a technical analysis background? So that means that you know a little bit of technical analysis, or you have been using technical analysis. So if you are, can you type a 1? Okay, if you are, you type a 1. So if you have no technical analysis, you type a 0. Okay, so I just want to know what is the level of the audience so that I can cater this session more suitable for your level. Okay, I can see that I have more 1 than 0, is it? Let's see. I have more 1. Oh, now I have more 0 coming out. Okay, looks like half. Okay, half. So I think still 0, there is still a little bit more. I think it's about half, 50-50. Okay. So for those of you who just started out investing, and then you are trying to figure out whether what is a fundamental analysis and what is a technical analysis, let me do a quick summary and differentiation. Fundamental analysis is when you want to make analysis on your investment using some fundamentals such as macroeconomic data like unemployment and the GDP and the interest rate. Okay, so these are the fundamental, as well as the competitors analysis and the company performance, financial performance analysis. So this is fundamental, whereby you look at how the company performed for the past year, and then their financial ratio and their net tangible asset, PE ratio, and things like that. So these are fundamental. Then what is technical? Technical analysis is when you don't look at these numbers anymore. You just look at one thing. And that one thing is the price chart. Okay. And you just focus on one thing, and that is the price, the volatility of the price. So if, let's say, you want to know whether this particular stock, whether it will go up today or tomorrow. Okay. So you look at the 15-minute chart, or you look at that very short-term 5-minute chart or 4-hourly chart. So you look at a very, very short-term chart, and then you try to see whether today, what is the direction. But however, for technical analysis, we can also use for longer-term analysis as well. It's not necessarily always has to be short-term, because if you look at our chart alone, you can see that we have daily chart, weekly chart, and monthly chart. So if you want to analyze for a longer perspective, you can always use a monthly chart, okay, and then a weekly chart. So, but however, for a short-term basis, like for example, this week and next week, what is the direction? So you look at that daily chart, okay? But anyway, we are going to look at this today, and I will teach you where to find these resources. And it is very simple. Nowadays, everything you can find open resource. Open resources means that it is openly available to the public. You do not have to subscribe. Okay, unless you want additional service, then they will ask you to subscribe. Otherwise, those charts are free. So basically, when we are looking at the technical analysis, just now I said that we only focus on one thing, which is the price, historical price. And the basis, the assumption is that we assume that history repeats itself. And consequently, the past trends predict the future ones. So for some of you who have been in the statistics background or computer science background, you probably have done certain predictive kind of analysis, whereby you produce the data and then you put it into the system, and then you let the system to predict into the future. Okay, so that is based on that history. Okay, you are trying to use that historical data and then you try to predict to the future. So that is on a computer science. But however, if let's say we are looking at chart, can we do that? Yes, we can. We just have to focus on a few things. Okay, number one, trend line. Number two, chart pattern. And then number three is the support and resistance. Okay, so once you find these three ingredients, the trend line, the chart pattern, and the support and resistance, once you have these three ingredients in the picture, basically you can kind of predict what may happen. It's not 100%, but then to a certain level of degree of confidence level. Okay, so meaning that it is always not 100%. Maybe you have 90% of a confidence level, 60%, or even 80%. Okay, so these are looking at the probability. So, and this is everything about probability. So that is technical analysis. Okay, and number two assumption is that the price pattern is the sum of all the behaviors in the market crowd. So which means that technical analysis will track the psychology, okay, the psychology of the market. So we are looking at people generally are emotional. Okay, all of us, whether you are professional traders or you are fund managers or you are retail investors, all of us, we are human. We are not robot. Okay. Of course, nowadays we are trying to use robot and AI to do some predictive analysis on the stock, on the financial market. But since we are human, we are trying to make the best out of it. Okay, majority of the participant is still human. So maybe in the future it will be all robots, but I cannot guarantee. But then now we are still human. So as long as we are human, we are still emotional, and meaning that we may have certain extreme reaction. Okay, can you see me? My chart seems to be, okay, let me open again. Okay, let me open my slide again. Okay, just a minute. Okay, maybe I use another device. Okay, so here I am showing you the slides. Psychology of looking at the market psychology, because the market crowd, sometimes you may not know what is their thinking until you see the reaction. And a lot of time, the market participants, they don't even know what they will behave later today. For example, if let's say, okay, on yesterday night, when you see that the Dow Jones, when you wake up in the morning and then when you see that the Dow Jones dropped 1,200 points, so what is your emotion? And then compared to another person who didn't look at the market index. Okay, so there are two persons. Person A is a normal trader, and then who wake up in the morning, the first thing is to look at the US stock market. Okay, so that is person A. And person B is a retail investor, whereby he doesn't follow the stock market on a day-to-day basis. So he a few days, then he will check what is happening in the stock market. So he never follow, but he's invested. Okay, Now these two person A and person B. So person A see that, wow, 1,200 point drop. Okay, the first thing in the morning, he will quickly want to sell something. He want to sell, he want to protect himself. Okay, so that is person A. Then how about person B? Okay, person B, he may not know what was happening. So after a few days later, when he opened the US stock market, and then he see that, oh, it's in green. So he missed out the point that the market actually fall for 1,200 points. So then obviously he didn't sell anything, and then he just hold his portfolio, and then he just life still goes on for person B. So do you see what is happening? The psychology can do for us. Meaning, because we see it, that's how our response is. Because we see that the market has gone down 1,200 points, and then we see how our KLCI also dropped yesterday. So then we become panicked, and then we lose the emotion. Okay, and then we sell something. Okay, so and then today you see it is in green again. But I'm not saying that it will not drop further. I'm just saying that the market sometimes is overreaction. You have overreacted. We all of us, we have all overreacted. And then if you do nothing, the market still go up. It will have a big sell down, okay? But however, it will bounce back, and then in the long run, it will still go up slowly. So if you to put it in the passive form of an investment, you don't look at it. Years later, it will still turn out nice if you're holding an index, like an ETF, S&P 500 ETF, or like a mixed portfolio. If you are holding individual stock, then that will be another question, because individual stock, they may behave individually. Some penny stock may never recover, okay? But the blue chip stocks tendency to recover is always very high. So it depends on what stock you hold. So what I want to say is that if let's say you are investing in a basket of like ETFs, okay? So if you are invested in ETF, this is some form of a passive. Basically, you don't have to monitor too much. But however, if let's say you are individual, maybe you need to monitor a little bit, okay? But make sure you don't affect by your emotion, okay? And meaning that if you believe the stock is fundamental, long-term, you want to hold for long-term, your intention is to hold for long-term, do not change your course, okay? Because because you see something, you change your plan, okay? So that is emotional, okay? So here we see that the time frame, basically we are looking at short term is weeks, medium term is months, and then long term is years, okay? And next we look at the support and resistance. Support is looking at the how the price is having being supported. So for example, let me share with you. Okay, let's say we are looking at a chart, okay? So by looking at the chart, right, for example, from this side, okay, so today is this one, okay, I'm looking at front can, and then today is this one, and then this is yesterday, okay, so this is the past 1 month kind of behavior, the price behavior. So can you tell me in the short term, where is the support and where is the resistance by looking at the chart? Okay, by looking at the chart, can you tell me where is the support and resistance? Okay, so for beginner lesson, there are a few lines that I want to introduce to you. Okay, okay, I already got somebody to answer me the question. Okay, so let's see. Oh, very good. Okay, very good. So Muhammad Helmi, very good. Okay, So help me actually got it correct. Okay, the support is here, which is this swing low. So if you are familiar with the technical analysis, right, you must also link to the psychology, because psychologically, people, the last time that we had the low is 2.65, around 2.65. Okay, so that is the last time that we had a low. So every time when it hit that 2.65, and then the market seems to be turning up again. So therefore, you can see that this level here, okay, psychologically, whenever the market participant see that, oh, whenever it touches the 2.65, then it bounces up. Whenever it touches the 2.65, and then it bounces up. So that means that this level is a support level for this particular price chart. Okay, and another one, Shamini also says that 2.9 is the resistance, this level. Okay, which is very good. So here we can also draw another line whereby we can show that the resistance is here, okay, which is 2.95. So meaning that if you do not know about technical analysis, but however, you know the swing high and the swing low, you can recognize swing high. Swing high means the inverted V, swing low means the V. V means a support, okay? You reach something and then you bounce off. So V is this support, and the inverted V are all these swing high. So if let's say you got no experience in technical analysis, but you can recognize the V's and the inverted V's, then this will be the support and the resistance. So you can see that these are the support and resistance. And then I want to introduce two lines to you. One is the 200-day moving average. So this 200-day and the 20-day moving average, they are the support and resistance lines in the chart as well. So where do you get this? So usually, first of all, the chart is from tradingview.com. Okay, I can give you this link. You can click into your iPad, your mobile phone, and your PC, because these are web-based. You do not have to download any software. Okay, so that is the good things about the technology. So very soon, probably you will have a robo-advisor embedded into this software, whereby you can create your own trading mechanism to trade as well. Okay, but that will be in the future, maybe a few years later. But currently, all these free resources, we have more and more free stuff here. So the free stuff here is that you can have 20 years of data up to 1990 something, okay, 1990s. And also you can get to input all these indicators, technical indicators. So these technical indicators, you can say, okay, I want to look at moving average. Can't open the link. Oh, let me give you trading view, because you need to register also. I give you the main one, the home page. Okay, I give you this home page, tradingview.com, and you just have to register with any one of your Gmail or email address. Any one of your Gmail or email address, you just register. Then, okay, and then within 1 minute, you can get access to this chart. Okay, and the trick is that there is a search bar here, so you have to search the stock that you want to see. So for example, front can. Okay, so you just have to type front can, and then you see a list coming out. So then you just have to click. Okay, you click, and then it will appear. So if you want to check Maybank, then you just click Maybank, type. You have to type Maybank, and then it will come out, okay, from that search bar there. Okay, from this search bar there. Okay. So here we are looking at indicator like moving average. Okay, moving average. So you see, oh, moving average here. So I click. Okay, I click, and then it will come out there. Once I click, it will come out here, moving average. The default is 9-day moving average. So then you have to go to the setting here, click the setting, and then you change to whatever moving average. So in this case, I look at 20-day and the 200-day. So here I put another 200-day, and the color, I put the green color, and then okay. So then this become my 200-day moving average. So what is the meaning? So meaning is that the 200-day moving average will have to govern or to give you a signal for the long-term trend, because 200 days. 1 year we have 365 days. So this 200 days is like more than about 9 months. Okay, it's about 9 months. So it's a very long-term kind of a trend line. So then it will give you a long-term trend perspective. And then the 20-day is just 20 days, which is 1 month. Okay, 20 trading days, which is just exactly 1 month. So we are looking at 20 days of a moving average. So here you are looking at front can. It is actually see a resistance here as well as a swing high here. So there is a strong resistance at 2.96. However, it doesn't mean that it will not go above it. It will just have some good news. If there is some good news, then it will break above it. Okay, so that is looking at the possibility. So here, I teach you how to draw the trend line. Okay, so the first step is that you go to the left-hand bar here. So these are the tools for you to draw lines. Okay, so the second icon here, you click. Second icon here, you click, and then you choose the first line, which is the trend line. Okay, then you start to draw. You see, you can draw. And let me erase everything first. So I start again. So I can draw uptrend line. In this case, it's a horizontal trend here. I can draw like this. And in this case, there's a small trend line here. I can draw like this. Small trend, uptrend there. Okay, so I can draw trend line. So as long as I can draw, I can connect the points, 1 point, 2 point, 3 point, I can connect, then I can draw the trend line. I can even zoom out and then draw a longer trend line as well. So if I were to zoom out, okay, so this one is a downtrend, right? So let's say I connect. I draw a downtrend here. So this downtrend, I'm looking at the top touching here, and then this is almost there, and then this is touching. So I connect this point and this point and this point together, 3 points together, minimum 2 points. Okay, once you get minimum 2 points, you connect. If you can get 3 points, 4 points, that's fine. So then this become a trend line. So then you see 1 point, 2 point, then you connect, become a trend line. That's how you connect the trend. So once you can connect all these trend line, then you see that, wow, there is a very clear path that you can see that the price is moving along that path. It's like a direction, it's like a road map. Okay, it's like a road map for the chart, for the price to evolve around that road map. So if, let's say, as long as it is within that line, so it is still within your expectation. But if it's it break above or below, then that will be a breakout. Okay, so then it will be another story. May I know when join trend line do we connect from tail to tail, bottom to bottom? Okay. The connection is that top to top, bottom to bottom. Okay. Unless you are very experienced, then maybe you may want to sometimes go for top and then the bottom, but usually I don't do that. So usually top to top, bottom to bottom. So here, do you see that I'm joining the top part here? Okay, when I join all the top part, it is the downtrend line. And then when I join all the bottom, okay, I join all the bottom, it is the uptrend line. So here, uptrend line. Okay, so remember, top to top, you connect the line. Bottom to bottom, and then you connect the line up. Okay, understand? Okay. So this is a trend line. Okay, so once you got the concept of a trend line, then you know what is a trend. Remember, trend is your friend. So this is the most famous sentence by the technical analysis. Trend is your friend. So therefore, you have to go with the trend. Okay, so although right now it is, if you look at it, this one is on a horizontal trend, and then let me show you the KLCI. Okay, let's say the KLCI. Okay, so what kind of a trend is this? So here we do see that it is an uptrend here, but recently this uptrend is broken by the other day, the panic selling. Okay, so it was broken. So now it is in a downtrend. Okay, so now it is downtrend. So once I can plot the top here, the top here, and the top here, so it become a downtrend. So when it is in a downtrend, you know that down is the trend. Okay, so you cannot expect too bullish at the moment because the trend, the sentiment is still on the bearish side. Okay, how to spot the beginning of a trend? The top, the obvious top. Okay, you have to zoom out the chart, and then so that you can see an obvious top. So for example, this is an obvious top, then you can draw. Okay, this is an obvious top, and then you can draw. So you have to see the obvious top. Okay, the intermediate, it depends on whether you want to draw a smaller trend line or a bigger trend line. Of course, all these intermediate one, you can draw a smaller one as well. Okay, but you can start with a bigger picture, big picture. You start with a big picture. Okay, so that you know what is the overall trend. Okay, you start with a big picture. They said, wow, I can see that this one is so many years. It's a 5 years chart. And for 5 years, basically KLCI is on a horizontal trend. Okay, so at least you know that that is a big trend. Then only you zoom in. Okay, then I zoom in. Oh, smaller trend is like that. The reason why you want to see a bigger picture is because the next part I want to say is that we want to spot the chart pattern. Okay, because if you were to look at the chart in a macro view, imagine if we can go up to the space and then we look at the earth, you see that the earth is round. But however, when we are on the earth, we can't see that we are on a round shaped earth. The round shaped earth can only be seen when you are outside the space and then you see from top and then you see, wow, our earth is round shaped. So likewise, in this technical analysis, you have to look at the chart in a macro view. You have to zoom out and then look at the macro view. So you see, I zoom out. If I see that it is not complete there, I have to zoom out again. So if I cannot zoom out, then I have to change to a monthly chart or a weekly chart so that I can zoom out further. Okay, so I change to a weekly chart so that I can zoom out further. Then you can see that, oh, I can see up to 1995, and then this one is a 30, 40 year kind of a chart. Then maybe I can see a better. So now I can see better now. So from here, do you see any chart pattern? Anybody? Do you see a chart pattern here or any chart pattern? There are many chart pattern here. So what is the most obvious chart pattern? Okay, let me erase the lines there. Okay, we see a double top or triple top. Okay, what else? Here we also see a head and shoulder. Yeah, head and shoulder. And then here is also like a triple top. Okay, so here is also like a double top. And now this one is a double top over here at the small part here. So right now, we are looking at a chart pattern is formed. Okay, so whenever you see a chart pattern is formed, you will have to make a alarm alert. But however, we need to observe a longer trend line. So over here, let me draw you a big longer trend line. So this longer trend line is start from the 1997. Okay, so we can draw a one long trend line, then you will see that we are supported by the long trend line. Can you explain what is head and shoulder? Yeah, okay. So Kuhan, head and shoulder, later I will also explain to you. So head and shoulder is this pattern whereby you have two shoulder, and then you have a head. Imagine this is the head, and then you have these two shoulder. You have a head and then with two shoulder, so it's head and shoulder. So this chart pattern is formed by one tall head and then two shoulder. Ghost pattern. Yeah, ghost pattern. Okay, so it's like a ghost pattern. Okay, so it's head and shoulder. So any free indicator to detect chart pattern. Okay, for chart pattern, the only free is your own eyes. Okay, the only free thing is your own eyes. There's no indicator to detect the chart pattern. So that is why when it comes to relying on the AI robot to trade, traditionally we are looking at the statistics whereby we look at the price, and then the indicator whereby it's all about the price, right? But however, now we are seeing that the chart pattern itself is so important, but unfortunately this chart pattern you cannot key in as a data. There's no data for you to key in the chart pattern. So therefore this chart pattern is recognition. So that's why nowadays people even thought about using the machine learning model to recognize the chart pattern. You just feed in thousands of millions of pictures of this chart pattern to the machine learning training page, whereby you can train them and then train them to recognize the chart pattern, because it's observation, it's recognition. Okay, it's not some numbers or some lines or indicator that for you to identify. So which means that you still have to rely on your own eyes to see the chart pattern. So although you see a chart pattern here, but however, you see this one is a long-term supporting trend line. So meaning that we are still supported. Okay, no matter how low it goes, we are still supported. So meaning that the bottom is near here. I'm not that bearish. I'm actually looking at bottoming. So the bottom is here, and then we are looking at a recovery. Because if you were to look at our stock market has been down for so many years. And you look at this year's GDP. This year's GDP, it is not that bad. Okay, we still have about 4-5%. So which means that we are on the right path. And the job employment is started to roll back, meaning that the unemployment rate is also reducing. So all these are showing some improvement in the economy, fundamentals, improvement in the economy. So then this fundamental will give you a longer term direction. Although the short term technical is more on the short term. So although the short term technically it is weak, but however, the long term fundamental is still there. Okay, so that is why I believe the bottom is near here, which I am also very excited about investing also, because it means that we are a few years later, when we look back, you will see that this probably will be the best opportunity, because historically at 1,400, how often do we get to be in this level, 1,400? How often? So you see the top was 1,009, 1,008, 1,009. Okay, that was a few years ago. So which means that years later, when you look back, this probably will be the bottom. Okay, but exactly which level bottom, I can't tell, but then around this level is more like a bottom to me. So I'm looking at this one, touch one bottom, and then touch one bottom, and then form a W here. Okay, so bounce off from this trend line. So let's go back to the chart pattern, and then we try to see the slides, and then we try to identify some of the chart pattern, and then see whether you can learn in half an hour or learn in 1 hour. Okay. Okay, so these are the support and resistance. Support and resistance. Okay. Support and resistance is when you find that the chart seems cannot pass through. For example, okay, the oil price, the crude oil price. Now, because of the war, the Russian war, right? Then everybody says that, oh, the oil price is going to go very, very high, and then it will be a historical high, and then it's good to invest in the oil stock. Okay, so that is the normal observation, and then the normal behavior. But if you were to observe carefully, right, do you somehow feel that there is some form of a resistance in the oil market? Meaning that every time when it tried to go to 120, okay, there were a few times this previous months, a few times it tried to go above that 120, but then it fall back. And then it wanted to break that 120, and then it fall back. So meaning that whenever you see that the price cannot pass through a certain level, that is called a resistance. Okay, it prevents you from going above it. So that is called resistance. Okay, and then whenever it reach, let's say the oil price, whenever it reached the $80, it bounced up. Whenever it reached the $80 and then it bounced up, then you see that every time it hit that level and then it bounced up, that is the support level. So in the chart, how do you recognize it? You recognize using the V, inverted V. Inverted V become the resistance, inverted V. Okay, inverted V. Then the support will be the V shape here, V shape. Okay, V shape become the resistance. So then this inverted V, all this become the resistance, resistance, resistance. So this become the support. Okay, so clear? Support and resistance. Because once you know about this support and resistance, then only you can see where is the level. Okay. Okay, the trend line. Here, the trend line. There are this fan principle. Fan principle is actually looking at the gradient of the trends. The gradient. If you look at it, it's more like a chart. Okay, a chart whereby this price increase is very, very sharp, very, very fast. So when the price increase so fast, then when you draw the trend line, it is of a higher gradient. So this gradient is about 60 degrees. Okay. Then, however, because you are going up too fast in a too short period of time, you lose your momentum, and then you come down a little bit, and then you go up slower. Okay, just like you first time take part in the competition, running competition, and then for the beginner, you feel like you are full of energy, you can run very fast. So once the event start, you run and run and run. Okay, so you use all your energy to run and run and run. After you run, you achieve this high, then suddenly you feel that you have no more energy already. Then you started to slow down. Okay, so you slow down, and then the next time when you want to pick up, you run slower already because no more energy already. Okay, you run slower, and then still up to a certain level, then you slow down again. Then this time you even become weaker. Then by the time you find that you cannot already, then you see that's a downtrend. So same thing. Okay, so in the chart, the market participants are all very concerned about the price being whether it will go up higher. They chase after the high price. They keep chasing the higher price. So when they keep chasing the higher price, initially they can still keep chasing, but after a while they see that the price is losing momentum, no more strength already. Then they know that this price is not going up anymore. Then up to a point, then they say, okay, give up. I have my profit already. I sell and then I go. So therefore, you have a lot of people selling. Okay. Okay. Oh, this class, okay. So I'm trying to see how easy I can go to, because in order to learn technical analysis, we start from the beginning. The beginning is that if you look at this price, you will know that the chart is basically made up of one variable, and that one variable is the price. It's the historical price. So it's a summation of all the historical price that you add all together, and then it forms this price chart. So meaning that if you do not look at the chart, okay, you do not look at the chart, but however, you have a very, very good memory. You can remember the price of the past performance. Can you still trade well? Yes, you can. You can still trade well because you know the previous price, where is the support and where is the resistance, where did the price reach until which price, the highest price and then the lowest price. You can still remember. You don't have to look at the chart. Okay, the chart is when you, of course, our human brain, we cannot always remember those numbers, so we have to rely on the chart because this has a record of all the prices, and then so we plot this chart, and then so that we can see how the price behave, how the stock behave. Okay, so these are all the price that it behaves. So for example, for this particular month, and then this is the price level for this particular month, and then this is the price level. So it record all this down. So once you see it, then you can study the behavior. Okay, all these are the behavior, and then you start to draw the trend line. Okay, you draw the trend line, and then you see how fast or how weak the chart is. Okay, so in this case, the fan principle is saying that once you draw a trend line whereby this trend line is about 45 degrees or lower, you basically will see that the uptrend is more or less over already. So meaning that there's the ending of an uptrend. Okay, so it's ending of the uptrend. So in this case, we are looking at here as the ending of the uptrend. So no more uptrend, and then it crash. So this crash is a severe crash. Okay. Now chart pattern. So chart pattern is from your observation. It's not no indicator for you. Okay, so it's from your observation. You just have to observe it, see it, and then apply it. So here we are looking at a few chart pattern here that are very, very common. It's like a, if you are able to spot it, it's like sure, almost like sure thing. Okay, almost like it will develop that kind of a behavior. So here we are looking at this one. Can anybody tell me whenever you see this M, right? What would you do? Okay, if you see an M, a pattern of this M, okay, and the price is here. Okay, do you buy? Do you short? So I see a lot of people say short, start to short. Okay, maybe you will get ready but not shorting yet, because you are still on this neckline. So you will get ready, okay, you don't short yet. But however, you can also long if you want, because this is a support level. So you will long here, and then you will have a cut loss somewhere there. So meaning, as long as it is still above this neckline, you can still long, but you make sure you have a cut loss here. Okay. And when do you short? When it is below certain level here. Okay, so once it breaks down, you wait for confirmation. Maybe it trying to rebound, and then if within 3 days it not managed to rebound, then you will short it. Okay, so you wait for 3 days of a waiting time to see whether it can rebound back or not. If it can't, then that is a confirmation of a short. What is a short? A short means a sell. Okay, short means sell. You want to sell. Now you'll be surprised. Isn't it we should buy low and sell high? No. For Malaysia stock market, we can allow short selling first. So meaning that you sell first, then you buy later. Yeah, that's right. Shamini, correct. You sell first, and then you buy later. So this is called short selling. And it is very common in the commodities market and the futures market. Okay. So meaning that you sell here. Okay, once it go down, you sell. And you earn the spread difference. Okay. If you use the word spread, and then Kuhan will be blur again. Okay, so we earn the price difference. Okay, we earn the price difference, meaning that you sell at 10 ringgit and then you buy back at 9 ringgit. So the difference is 1 ringgit. So you earn that 1 ringgit difference. Okay, so all right. Here is a head and shoulder. You see, this is one head here, and then with two shoulder here. So the minute you see a head and shoulder, you will also be alarmed. Okay, you know that it's going to fall. And sometimes you see that, how come sometimes when you see that you have a pattern, but then it didn't drop and then it goes up, but sometimes it goes down. Okay, have you ever wondered under what situation the chart pattern did not continue and then it reverses? Under what situation the chart pattern will continue and then it really fall, it really drop? Under what situation? Have you ever wondered? Okay, let me give you a scenario. So if let's say you look at let's say we look at, okay, let's say any share lah, okay, Inari, okay, okay, so this one is a weekly chart, and I'm trying to zoom in a little bit. Okay, wait, I want to erase all this. Okay, so you focus on this part here. So if you are looking at this chart pattern that you see, let's say we use a candlestick. Okay, so if you look at this candlestick chart pattern, and then you can see that, oh, there is a pattern here. Although you do not remember what is the name of the pattern, but then somehow you see that the chart is not moving higher anymore. It is like moving horizontally. So the minute you see that the chart is moving horizontally, the chart pattern is formed already. Okay, so same thing here. The minute you see the chart is moving horizontally, not going higher anymore. Okay, so this one is going higher, 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 right? But the minute you see that it is not going higher anymore, and then it is moving like on the horizontal trend, like this, horizontally, it is not going higher, but moving horizontally, moving sideways. This is a pattern. Okay, now in this case, you see that this is a chart pattern, and then this is a neckline. So how do you plot the neckline? You see that there's a V shape here, right? So the middle. So then you just put the line here to this line. So therefore, this becomes the neckline of this chart pattern. So the minute it crashed below this chart pattern, you can wait for 3 candlesticks. Okay, so here you count 3 candlesticks. 1, 2. Number 2 candle is started to try to go above again. Okay, and then 3 still below, so you short. Okay, you short here, and then it go down. Now there's also another trick here. So you need to know when is the bottom, right? So you need to measure. You measure the top here. Okay, the top here, and then you measure the neckline. And then you see what is the difference here. From this top and then to the neckline, you see what's the difference. So this is the price height, the height of this pattern. Then you project here. So you see, this will be your price target. So meaning that if it were to go according to the plan, it will reach this level. It will reach this level. However, it reverses here, okay? Because there is a 200-day weekly chart here, 200 weekly chart, and then it sees some support around this line, and then it reversed from there. Okay, so that is the chart pattern. So meaning that you find a top, and then you draw the neckline, and then you start to project the bottom. And the bottom is not always 100% it will reach the bottom. Okay, I'll show you another one, which is the S&P. So here the S&P, we see that currently we are looking at a chart pattern here. Okay, let's say we see a chart pattern here. It is not going higher, right? It is now moving horizontally down and then trying to rebound. So you can measure the top here first, 4,008. Okay, then you start to move this to the neckline here. So then this become the neckline. So this neckline is 4,000, around 4,002. 4,008 minus 4,002, which is 600 point. So then the next thing you need to do is that you use that 4,002 minus the 600, minus this 600, and this will give you 2,000. Okay, 4,200 minus 600, 360. So then you have to plot where is 360. 360 is somewhere around here. Around here. Okay, so this will be the 360. So which is exactly where the bottom is, June 13. Okay, June 13, it was there. You see, June 13. So would this be a possible bottom? Okay, anyway, this one is a weekly chart. Maybe I can show you a daily chart. Because sometimes if you want to see a big picture, weekly chart is clearer to you. But anyway, we can always see a daily chart. A daily chart, we can still see a picture here. So this is the line is still there. So the 3600 was almost there. Okay, it was almost touching on the June 13 there. You see? So meaning that this height, it was met on this date. So the bottom was met on this date. So if you were to ask me, is this the bottom? Yes, this is the bottom. And then whether there is any other bottom lower, we do not know until we see whether it can have the support and resistance or not. So maybe sometimes it may break the resistance. Maybe it may break this level. And then once it breaks this level, then you will have a lower low, then you will have a downtrend. But as long as this level is not broken, this is the bottom. This level here is the bottom. Okay, so that is technical analysis, which is how you spot the top and the bottom. Okay. For the rising wedges, if it's a triangle, you look at the base of the triangle. Okay, so for example, if you look at the triangle, okay, let's say this is a triangle here. Okay, let's say this is a triangle and then it's trying to break below. Okay. If let's say you are looking for any form of a triangle, because when you are in any form of a triangle, right? So you will have a base here. So whatever the base here will be the height. So you can have a smaller triangle in the middle as well. Okay, let's say you have a smaller triangle. Okay. So if let's say you have a smaller triangle, then this base here will be your height, this base here. So you have to measure the base here and then project up here. Okay, so that is looking at the triangle. Triangle, you have to measure the base. Because the triangle, the shape is not rectangle, right? It's not very obvious to you. So therefore you measure the widest part here, the widest. Just like when you see a double top, some double top, you have a big high top, then the other top is a lower top. Then which top you measure? You always measure the highest one. Okay, the highest. Okay, so here, same thing, you might measure the widest base here, the widest. Okay, okay, so here we are looking at the top that you can identify, which is whenever it is not going up anymore, it is going horizontally, the chart pattern is formed. Once you see the chart pattern, you measure using the neckline. And then once you measure the neckline, you measure the height, and then you project to the bottom, and that will give you the target, and which is the bottom. Now, whether this bottom, it will be sustained, depend on this reaction. See whether next week, how the investors react to the interest rate. Now, a lot of people, they will think that, okay, interest rate is a good indicator for the stock market trend. But however, when I study the trend of the interest rate and the US stock market, I see that the interest rate is a poor indicator for the direction of the stock market in the US. It is a poor indicator because there are certain years whereby when you raise the interest rate, the stock market continue to go high. There are certain years when you reduce the interest rate, the stock market go down. And there are certain years when you raise the interest rate, the stock market go down, like what you are seeing now. So which means that if you were to use the interest rate as a prediction to the US stock market, this is a poor prediction because it is not correlated. It's not highly correlated. So you have to think beyond the interest rate. You have to look at the fundamental, you have to look at the market participants, and perhaps you have to look at other financial markets. You see how other financial markets are doing, and then see whether that will affect the sentiment of the US stock market. Okay, so that is looking at the bigger picture. Okay. Okay, so let's recognize more chart pattern here. Here, rising wedges, right? So that will be the base here. Then this is a double bottom, meaning that once you see a W, you should be getting ready to buy. Okay, so which is a very good sign. And then triple W means that it is a reverse head and shoulder. It's also a buy. And then when you see a falling wedges, it's also a buy. Okay, so always try to remember this. This is more like a triangle. Okay, and then this is like a rectangle. And then this one is head and shoulder. Okay. Can you, how do you predict the bottom line? Oh, okay. I show you. Here. Okay, so here I recognize this one first, which is 3,800, and I will draw another line at this 3,800, 4,200, 4,002, 3,008, 4,002, and 4,002 minus the 600 of the difference will give you 3,600. 4,600 is there. Okay, so that is the bottom. Okay. If you want to look at our KLCI. Okay, the KLCI in 2020 crash. Okay. Okay, this one I need to use a weekly chart because it's a very, very big chart pattern. So I need to show the weekly chart so that you can see. Okay, so this is the chart pattern, right? The double top, right? So as usual, you see that it is moving horizontally. You draw a top line that, okay, to show the highest point, which is 1,009, right? Then the next thing, you draw the neckline, which is the middle part here, whereby you draw around this level up a little bit so that you can touch here, and then this is the V, this is the inverted V, and this one is 1610. So we round up. Okay, so 1,009 minus 1,006 will be 300 point. So 300 point minus away from that 1,006 will be 1,300 over here. 1,300 is here. Okay. So this, according to this chart pattern, this 1,300 is the bottom. But however, it's not always 100%, right? So in this case, it overshot to 1,200, and then before it bounced off from there. Okay, so meaning that sometimes you are not always right at the bottom there. It will overshot and then it will bounce off. But there it will be a certain time whereby it will go down and then it will continue to go down. So if that's the case, you have to draw another target at another 300 points lower at about 1,000 level. Okay, minus 300, then you get 1,000. So you see that this is the first target, and then if let's say it continue to go down, then it becomes the second target. If it continue, then the third target. So this is how to measure the bottom. Okay, so therefore the bottom is not always stop at the first target. So sometimes it may stop at the second target or the third target, depending on the market participant, how bad the situation is. Okay, you have a clearer idea, right? Okay, let me continue. So Shamini, you get a better idea. Okay, it's the height of the chart pattern. The top and the neckline you measure, and then you project to the below that neckline. Okay. So so these are the reversal, meaning that it's the top or the bottom, right? In sometimes you do see that they also happen as a continuation pattern, meaning that it go up and then it rests for about 3 weeks and then it go higher, and then it go horizontal for about 2 weeks and then it go higher again. So then these are called the bull flags and the bear flags. Okay, so these are more on the intermediate. So meaning that continue to go higher. It's just that intermediate, it just pause for 1 week, 2 weeks, or 3 weeks. Okay, if you pause for too long, then you have to be worried. It could be a reversal trend. Okay, you cannot pause for too long. Okay. Okay. So then this one is looking at the rectangle chart pattern, and then you construct all these chart pattern, and I want to bring you to another website. Okay, this website is our Bursa marketplace. Okay, whereby you can see the live. You can have a simulation, because this one is all you learn, right? You learn how to trade, you learn how to recognize the pattern, and then you learn how to buy, and then you learn how to sell. But I want to show you where you can learn on a virtual trading, okay, using the Bursa marketplace. Okay, just a minute. So this is a chart pattern, and head and shoulder, this one I have mentioned already, and the head and shoulder. Okay, so all these are the head and shoulder, and which I have mentioned. So this is the price target. Okay, so it didn't reach there, but it reached here. Okay, so I will come back here again. I show you the Bursa marketplace first. Okay, due to the time constraint, I have to quickly bring to the Bursa marketplace. So you have to type Bursa marketplace. Okay. Okay, how many of you know about this website? If you know about this website, you type a 1. Okay, do you know about this website? Okay, are you registered already? Have you registered? Okay, you go to Bursa Academy. Okay, you go to Bursa Academy. Okay, we all register together. Okay, we all register together, and then I will show you how to trade inside the virtual trading. So you go to Bursa Academy here. First, you go to Bursa Marketplace first. Then we go to Bursa Academy. Okay, under the Bursa Academy, did you see a simulator equity simulator? Then you go to equity simulator. Okay, so this is the equity simulator, and then you click. So you need to log in. Okay, so I will log in using my email address. So then you have to type the code 3. This is my code, and then you have to type your own code. Okay. Now this is the live session. So meaning that this is your virtual trading account. Once you register, this becomes your own virtual trading account. So you can use the money given to you. So how much money they give you? 100K. Okay, 100K virtual money. Then you can start to practice using the skills that you learn. For example, you want to buy low, sell high, right? So you have to identify the bottom chart pattern, which is a W. You have to identify that W. So so I give you some time to register first. Okay, you go to the Bursa Marketplace, Bursa Academy, and then Equity Simulator. Once you're at the Equity Simulator, you have to register using your email address. Okay, so once you register, you type a 1. Okay, once you register, you type a 1 so that I know that you register, then I can continue. Okay, so once you registered, you type a 1. Okay, I give you some time to register. The chart is live or delayed? It's live. It's live. Okay, so that is a good thing about this. It's a virtual trading so that you can trade with the virtual money. And once you finish, you type a 1. Registered, and then you type a 1. So today market is up 1.9. So it's 1470. So what's the significance? Okay, so if you to look at the, okay, you have done already. Okay, you done already, then we can proceed. Okay, let me introduce a platform to you. So this platform is supported by end-to-end. Okay, end-to-end. And if you have already have existing investment account like Afin Huang, I'm not sure CIMB, maybe CIMB, Kenanga, all these are under end-to-end. So you see that these are very familiar to you because they are using the same platform. Okay, so here we look at this code. Okay, you click the code. You click the code, and then this will be the code for today. So the top volume, okay? So here you can change to by gainers. So then it will be the top gainers here. So these are the top gainers for today, this morning. So the top gainers are Petronas Dagang, and then the Nestle, and then the PPB, and then the Petronas Gas, the MISC, the Dialog, the Maybank, the Public Bank, the DG, and all this. So these are the top gainers. Then we look at the top losers. Who are the top losers? PCAM, KLK, IOI Corp, Mr. DIY, and Harta Lega, Top Glove. Okay, see, Top Glove is below 80 cents already. Inari, IHH. Okay, IHH is unchanged. So these are the top losers, but actually they didn't fall that much. It's in terms of a percentage is I do not have the percentage, but anyway, in terms of cents, it's not much. Okay, so these are the top losers. So then you can always go back to the volume. So these are the top volume counters. Top Glove, Harta Lega. So meaning that a lot of people are selling the glove stocks today. Okay. If you want to look at the chart, okay, you go to you click this, and then you right mouse click. You right mouse click, and then you look at the chart. Analysis chart. Okay, so this is the analysis chart, and then you see the chart. So we can expand this a little bit. So this, once we are here, we can see that here we'll have all the values for top glove. Cannot see my screen now. But the other device, I can see my screen. How about others? Can you see my screen? Can, right?
You can see your screen.
So Chan, you log out and log in again, because sometimes it's your PC or your mobile phone.
Yeah,
okay?
if you're on tab, sometimes you have to swipe to the right or to the left to be able to see the screen.
Oh, on the tab,
I'm not sure lah. So sometimes, you know, yeah.
Okay. So here we are looking at this chart here, and we can decide whether we want to use a daily chart or a 15-minute chart or 30-minute chart. Let's say we want to trade short term, so then we go for 15-minute chart. Then this is a 15-minute chart. And we can have a full screen here, enlarge full screen. Okay, so, or we can do something like this. We just close this one. Then we can see okay, maybe I need to do something like this. Then you can see better. Bigger screen. You can move this. You can move the chart around. And let me see how to go back to my screen again. Here I click the top. There's one small icon. I click, then I got back everything here. So I can save the chart as well. I can save it. I can put up I can show, I want to see Heikin Ashi. Okay, so I see Heikin Ashi, it's nicer, it's clearer. If I show the candlestick, not very clear. So Heikin Ashi, I can see very, very clear. I can see the trend line. But however, if let's say you want to see the gap, you can't use the Heikin Ashi, because Heikin Ashi, you will not see the gap up or gap down, because they will have no gaps at all. Every candle is based on yesterday's high and low average price, so you will not see the gaps at all. Okay, so that is a disadvantage about Heikin Ashi. But however, nevertheless, it is a very good indicator whereby you can see a clear picture, a clear uptrend, a clear downtrend you can see. So from here, do you find that this is a better chart than the candlestick? Because it is very clear. Just now when I show you the candlestick, right? You see like this, not very clear. But once I change to Heikin Ashi, it's very clear. Okay, so I can see the double top here. And let's say we try to measure the double top here. Okay, let's see if I can draw. Yeah, this one you make a comparison. Okay. I can't. Here a line. Okay, the lines are here. Okay, the lines are same as the trading view just now, right? So it's on the left-hand side. This is a trend line. So I'm drawing the trend line here. And I want to see that this is a small double top here, right? So I draw a neckline here. So this is a neckline. This line is not very clear. I want to increase my line. Okay, so this is my line, and that price is 79. So 79. And then where is my top? My top is here. Is 79. This is 78. Okay, 78. And this is 79. Okay, so actually this is 1 cent only. Is it 1 cent? Okay, my eyes not very clear. I think it's 78 or 76. Oh, 78. And then this is 79. Okay, So this one, then the next one will be here, 77, because it's 1 cent. So the next one will be 77 here. So in a 15-minute chart, I can see that 77 is my bottom. Okay, in a 15-minute chart, I can see 77 is my bottom. So then you see somehow it is getting some form of a support at this 77 level. How to split 3 screen like yours? Okay. So when you open, right? Okay, let's say I close everything. I close everything. I close everything. Okay. So let's say you have a blank page here. So then the first one you open up, you click the code and then you got the code and then you move it here. You move it and then you just rearrange your slides. I mean your template. Okay, so you can say, okay, I want to make it like this. And the next one, I want to see stock chart, stock info. Okay, so I click the stock intraday tracker. So this one, I move it to the side here. So this one, I got it from the stock intraday, stock info here. You see the I here, the I stand for info. So I click the stock info tracker and I got this and I move it here. Then the next one, I want to put in the chart, right? So the chart is here. Intraday or analysis chart, you click the analysis chart. So this chart will be in the middle. You put it here and then you drag it down. So then you rearrange your template. After you rearrange, you save it. So this one, I go to the left so that I make it smaller. And I want to see a bigger chart here. Okay, maybe I move a little bit here. Okay, so it's up to you how you want to you rearrange. Okay, once you rearrange, right, you click the save button here. Save the current layout. You click the save current layout button here. Click, and then your layout is saved successfully. Okay, so you save this one. So the next time when you come in, you click on the first page, it will be this page. And then you can do another setting for the second page. So there's another setting for the second page is like this. And the third page is like that. And fourth page is different. So different pages, you have different layout. So then you can see differently. So the first one is the three section layout. Okay, are you following? Okay, which time frame am I using? Okay, so just now I'm using the 15-minute chart. So I find that using the 15-minute chart is good for intraday because it's short term, it's 15-minute chart. So you can use 15-minute chart together with a 4-hourly chart. Okay, and then together with the daily chart. So meaning that in a one day before you enter, right, you look at that 15-minute chart first. You try to draw some diagram out of it. So just now, I see that the support is at 77 cents. Okay, so you can't enter unless you see a breakout. So then you need to draw another line. So you need to draw a downtrend line there. But because this one is on the low side, I need to expand it further. Okay, I try to move higher so that this one is the line, and then you try to draw a line here. And then you draw a downtrend line here. And then waiting for a breakout. And then if you can, you add in the 20-day and the 200-day. Let me see the indicator, this one. Okay, moving average. Okay, so I click the moving average. I click 2 times. And then I want to use another one is the RSI. RSI. And then I click 1 time RSI. Okay, so then I can see my RSI is at the bottom, and then my this line. Okay, so the 9-day I want to change to 20-day here, and the color I want to change to purple color. Is it very clear, or I prefer orange color? Then the 200-day I want to change to green color, and here I change to 200. Then at least I know that this is my 200-day is there, and my 20-day is there. The operation is very similar to the trading view. Okay, so you just have to move this around, and you see that, okay, so you wait and see, because it could break below this 77 and then it may go lower. So if it go lower, it may go down to maybe this level, which is around 60 cents. It may, okay, based on this height. So it may. So have to be careful and wait for the breakout. So you can draw another line waiting for the breakout here as well, the smaller trend line here. Wait for the breakout. Okay, so this one cannot trade yet. So then you find another one. So here we try to see another one. Okay, let's say you look at the top, see which one is tradable. You look at the top volume. Let's say Tenaga. Okay, you click Tenaga, and then you click the right hand side, you click the chart, analysis chart. Then you see this one will refresh. So this become Tenaga, and then this is Tenaga as well. So let's see if we can trade this one. Change to 15-minute chart. Okay, so then this one you drag down. Okay, if let's say you want to enlarge it, also can, we enlarge it. Okay, so same thing, I want to show my indicator, moving average, and my RSI. And the RSI is not very clear, but that is there. And the moving average, I want to go to 20. And the 200. Okay, so my 200 is there. And then this one is looking at here. So what I can do, also draw a trend line waiting for a breakout here. Okay, no breakout, no action. Wait for the breakout. So here we can't do anything but to wait patiently for a breakout. Okay, and then the breakout must have the volume as well. So that is by looking at trading in within the day. Okay, so this is like if it's a breakout, you are looking at where is the target. The target will be the next swing high here, around here. So this will be the target, which is 887. Okay, then where is your cut loss? Your cut loss will be this level, will be 870. Okay, so this 870 will be your cut loss point. So if you do go in and then you need to cut loss, you have to cut loss. Okay. Okay. How to get several white square at the top of the chart? White square. This one. How to get? Oh, just now when I click the trend line here, I click this trend line, and then when I start drawing, it just automatically pop up like that. Okay, when I start drawing. So you try and see, you try to draw a trend line and then it will pop up automatically. Okay. So this one is a breakout here. So for example, you traded on which day is it? On the 13th of September. Okay, let's say you were trading on the Monday. You see that, oh, finally there's a breakout here. Okay, once there's a breakout, right, you are not sure yet. Okay, you wait for 3 candlesticks. 3 candlesticks to see whether it fall below this line or not. But if let's say 3 candlesticks also didn't fall below the line, it means that it is supported. Then only you go in at the 4th candlestick. So you go in at the 4th candlestick and then you see boom, boom, boom. Then you take profit. Usually I wouldn't go until so high. I would just look at this level, the previous high, and then you probably take profit around this level already. Okay, you wouldn't wait for this. So here we are looking at another breakout here. Okay, so here is also another breakout. So if you look at here, right, here is the downtrend line. So this one also happened on the September, wait now, September 7. Okay, September 7. September 7. Okay, then you wait for 3 lines, 3 candlestick, wait for 3 lines. Then it didn't fall below. Then the 4th candlestick, you go in, and then 1, 2, 3, 4, 5. So then this target, right? Usually I will look for either this or previous high is here. Okay, these are the possible target that we are looking at. Okay, this target is too high. I don't think it will go that high, but this level or this level are possible. Okay, so in the end, you probably will sell at this level. Okay, so from how much? From the 8. I can't see the, I think it's 860. 860, and then this one is 870, 78. About 20 cents. Okay, so this trade here is about 20 cents. Okay, so then you go and see which other top volume counters that you want to trade. Okay, because the reason why I choose the top volume is because of the technical analysis works well with the top volume, high volume. If let's say your volume is very low, and then sometimes you have trading, sometimes no trading, this kind of stock, you can't use technical analysis. You can't, because too illiquid. Okay, you have to have those stocks that are high volume, whereby the sentiment and then not easily manipulated. These are more easily. But anyway, you can just try virtual. This is virtual money, virtual trading. You just try. You practice, and then you go to the real world. Okay, and any questions that you want to ask about this trading platform here? Any questions you want to ask about trading platform? Okay. Any stock you want me to see, and then I'll show you. Any stock? Virtual money finish, how to top up? Good question. Okay. Samaharan. Okay. If let's say virtual money finish, you have to email them, call them, or email them and ask them to refresh you the 100K. Otherwise, you use another trading email address. You register with another new email address. You have so many email, right? You register with another one, and then you get a fresh one. Okay. KGB has to be high volume. No high volume cannot trade already. KGB. Okay, so this one, I right mouse click, I get the analysis chart. Okay, then I expand it. Look at the volume. The volume, okay. I can see that the trend is there. I need to see the 15-minute chart. It's on the uptrend. It has gone up so high already. I wouldn't want to chase. Something like this, I wouldn't chase. Okay, but anyway, I can zoom out a little bit and see a bigger picture. Okay, so this picture here is showing it has been horizontal for some time. It has been down, okay, then horizontal and then up, and then continue to go up. So, and there is a gap here. So this gap here, okay, this gap here, with the gap is around this level. Okay, so I make a line here first so that you can tell where is the gap. The gap is around here. Horizontal line. The gap is around this level. This level. Okay, so meaning that now it is closing the gap. Okay, so this one is a very interesting case study because you have such a big gap down. Okay, I do not know what was the reason for such a big gap down, but the fact that when you had the gap down and then you try to move towards filling up this gap, it is a very significant information. It means that this stock here is very, very bullish. You got this gap down. I do not know what's the reason, but then over the months, a few months time, over the past few months, it has been trying to fill this gap, and then now it is about filling up the gap already. So meaning that this is a very, very bullish stock, and it may go higher. It may, because of this gap being filled. Okay, so technically, if the gap is filled, it may go higher. That is technically. But of course, there is also the fundamental news, what is the news behind and things like that. So there is no guarantee that it will definitely 100% go above it. It's just that there is a possibility that it may go higher. And it depends on the driver. Okay, what is the news behind, and then whether it can go further or not. But looks like it is very bullish for this particular stock. Okay. Okay. So here I'm just telling you the big picture. Okay. Let's see. Bonus issue. Okay, so it's not a gap down, it's just a bonus issue. Okay. When suitable EP for you, you don't I don't understand, Zach. Can you rephrase your sentence again? I do not understand. Okay. Yeah, I use 15-minute time frame. Okay. So, okay, so you can explore. Another one I want to share is the portfolio. Okay, so in this portfolio, once you see the cash limit, supposed to have 100K lah, but I don't know why I have 0 here. But supposed to, yeah, here is 100K here. Okay, so I have 100K here. So then I didn't trade anything. So you can trade, and then once you buy any shares, right, it will be under here. Okay, it will be under your portfolio. Then you can monitor. And then the ordering. Okay, so let's say you want to order, let's say the KGB you want to order. Okay, so then you have to right mouse click and you key in the buy or sell. Okay, so let's say you key in the buy order, so then you see this coming up. So how do you buy? So did you see this order type, limit order? So there's only one limit order here, so meaning that you can only buy, you cannot buy market order, but you just buy the limit order, meaning that you just have to key in a price that you want to key in. Okay, market order means that it will automatically transact for you at the best selling price. So here, let's say you want to buy, okay, and the quantity, you are looking at how many quantity. So one lot is 100 shares. So then you buy, the stock is, you have to search for the stock name first, KGB. Then you see KGB, then you click and then it will appear. Then you key in the price. Okay, before you key in, right, make sure you look at this where is my, okay, I key in again, buy. I have to, how do I change, go back? Okay, let's say I key in the buy again. It's not. It's it's hang a little bit. Okay, let's say I choose another stock. I go to another page. Let's say I go to another page. Is my line okay? You can hear me, right? But how come it's not refreshing?
We can hear you. Just that your screen is the Bursa Academy looks white. Now it's showing.
Okay, so let's say I buy KGB. Okay. Then I right mouse click and then I click the buy button. So the top part here, okay, so the top part here, make sure you monitor the top part here. So this one, it will tell you the bid and the ask price. So the bid price will be the person who are queuing to buy. Okay, so let's say you are the buyer. So then your price will be under the bid price here. And then the ask price will be those people who are trying to sell to you. So you know that the best bid price is 1.43 and the best ask price is 1.44. Okay. And what is the last done? The last done is 1.44. So they are actually buying at the seller's price. So meaning that it is a bit on the bullish side. So if let's say you want to get it done straight, you have to key in 1.44 so that you can get your last done immediately. Because you are just buying at the seller's price. Okay, so you can get it immediately. However, if let's say you say, okay, I don't want 1.44, I prefer 1.42, then you have to key in 1.42 here. Okay, then you have to key in how many quantity. Okay, you have key in the price 1.42 here. Okay, you key in the price 1.42 here, and you key in how many you want to buy. Let's say you want to buy 100. Okay, 100. No, it's 10 lot. 10 lot means 1,000 shares. Okay, let's say you just want to buy 1,000 shares, which is 10 lot. So the cost is 1,420. So it's 1,420. So then you just click the buy button. Then you just click, it will confirm again, and then you just click OK. Then it will be under the queuing. It will be under the order. Okay. The actual queue won't be effect. According to, I think it is exactly following the real time. Okay, it will be exactly following the real time. So whatever happened here, it will also in the real world, it will happen here as well. So if let's say you are looking at 1.44 and then you want to get it immediately, let's say we buy another one at 1.44 okay, 1.44, and we buy also 10 lots. Okay, we click 1.44, click OK. So then you quickly go to the order here. You see that my order at 1.44 is actually transacted. Exactly, immediately it filled. But just now the 1.42 is still queuing. Okay, so that means that this is real time. Okay, real time. Okay, you got it? Okay, so that's how you can try using the virtual trade. So it is exactly same operation as a real situation. It's just that this one is the virtual money. You can get to use your virtual money to trade first. So it is a good practice, okay, especially now the market is low. It is a good practice so that you can practice, and then when you are confident enough, you start to invest with the real money. Okay. Okay, so let me go back to my slide again. So here we are looking at, today we are looking at the chart pattern, how to identify the chart pattern to spot the top and the bottom, okay? Because in Bursa Malaysia, we can buy low, sell high, right? So we try to spot the bottom and then we try to go for a breakout trade, okay? So okay, so here we are coming to the Q&A session. So if you have any questions, feel free to ask me.
Yeah, right in the Q&A box, yeah, not the chat box. Right in the Q&A box.
Right in the Q&A box, yes.
Yeah, not the chat box.
For
All right.
the wedge, how much
All right. Thank you so much, Pauline. Yeah.
line it needs to touch for valid pattern? What I mean is that example double bottom need two support point and the break on third resistance point, then the pattern is valid. Actually, the pattern for the pattern, in order to draw the pattern, you must have the trend line, right? So the trend line is by definition any minimum 2 points you can draw a trend line by definition. So you can draw in 2 points, 3 points, you do not need to confirm. So as long as you see 2 points, you can draw a trend line. Okay, and by looking at it, you see a pattern, you just draw. So how long the pattern need to be formed so it will be valid? Good question. How long the duration? Okay, that one is determined by the market participant, because we never know the formation of the pattern will take how many years. So sometimes, for example, the pattern may be just 3 weeks. Then if it's a 3 weeks chart pattern, the effect will be smaller. But if let's say the pattern is a 2 years chart pattern, like the cryptocurrency, okay, the cryptocurrency is a 2-year chart pattern. So then the effect, when it breaks, the effect will be longer. How to screen those potential stocks? Okay, so for the potential stocks, it will be for me, I will go by my own filter. So meaning that I have a watch list. So after you have the watch list, right, then you just revisit those watch lists over and over again, and then to see their chart. And then to see whether they are forming any pattern or not. You must have a watch list of the tradable stocks that you would like to trade. Okay, once you have it, then you can use that. But however, if let's say you want to screen, right, it will be not easy, but then it can be done also. So but however, for this platform, there is no screening tool yet. And for TradingView, they also do not have that breakout screening tool, because what I'm trading is the breakout. So for breakout, there is no screening tool, unless you say you want to be above the 20-day moving average or 200-day moving average. This kind of a tool still can screen. But if let's say you want that specifically, the chart pattern, the breakout, no, there's no screening tools for this one.
But there are fundamental screening tool on Bursa Marketplace.
Okay.
For you to screen out the fundamentally strong companies, and then you can try to find any entry or exit from technical perspective into these strong companies.
Yeah, so under here, the Bursa Marketplace, we can use
under
the
tools, yeah.
And then you can see the screener. Okay, so you can screen from here as well. Okay. Yeah, so here it was mostly on the fundamental screening tools.
I think if you want to screen technical patterns, right, I believe ChartNexus provide the screening tool, but of course this
pattern also no. ChartNexus also, because for pattern, right, it's a recognition.
Oh, okay.
The compute, you can't key in the pattern into the computer. The computer is recognition, so it's only machine learning model can recognize. So the traditional one cannot.
So far, your eyes are okay.
My eyes, yeah, our own eyes. Okay.
All right. The next question is, can you share the combination of your frequently used indicators?
Okay, the one that I show you just now, this is my frequent use, which is the 20-day, 200-day, and the RSI. I use very, very simple indicators. I do not use complicated indicators. So that is why I focus mostly on the trend line breaks and drawing the trend lines and the chart pattern. So these are the main things that I focus on. I don't rely too many on that indicators, because indicators are, lagging, and then they are, sometimes it will confuse you because of too many indicators. Yeah.
Okay. So the next question is, if the pattern is formed in a short period of time, is it true that we also need to expect the target price to be met within a short period of time?
Yeah. Yes. So meaning that this duration, the duration of the chart pattern formation, right? It will determine the duration of the bottom. Because if, let's say, it is a small chart pattern, then this one will be a short bottom as well. It will be very fast, it will recover. So it will be more like a days or weeks rather than a prolonged kind of thing. Okay, so which means that the pattern itself, it will also match with the duration of the bottom. It will match. Okay, yeah.
Okay. The next question is by Prakash. What is your preferred settings for RSI indicator?
I'm using the normal setting, which is 30 and 70. But however, there are some people, they prefer to use 20. 20 means very, very bearish. And some people, they prefer to use monthly or weekly RSI. But I would like to look at the RSI as what is your objective first, because if you want to use the RSI, you must be looking at trying to buy in a very depressed manner, meaning that it has to be oversold. So if it's oversold, you buy, then you have to ask yourself, is this stock something that you want to hold for a longer term? Is this a value stocks, or is it a fundamental stocks or dividend stocks that you want to hold for a longer time? Then only you use the RSI. So once you use the RSI, then you can decide whether you want to go for weekly, daily, or monthly. It depends on your perspective. So usually I will look at weekly or even monthly. Okay, so these are for really, really long-term investment. And for month to month, then you just look at the daily. And for me, I think 30 is good enough. 20 is a bit on a oversold. So I look at 30. Because if you look at Maybank, okay, Maybank, they hardly touch on 20. So 30 is something that, also very difficult to touch on, and unless it's a very rare sell down occasion. Okay, so it depends on which stock you want to apply, and then that will determine the setting. So I do not have like a fixed rule for all the RSI, because when you apply the indicator, I will see the situation, then you will adjust according to the situation. It's not a fixed rule. Okay, it
All
depends.
right. Thank you so much, Pauline, for addressing the question and answer, and also addressing many questions along the way, right? So, but however, times have run out, so we are not able to take in any more questions right now. So, before we conclude, just want to share that this equity trading simulator on the Bursa Academy is built by Bursa Malaysia to provide a simulated experience for you to trade the market without risking your hard-earned capital. So they invested a lot of money to give you real-time price feed. So do make sure that you make good use of it. All right, it is 90% identical to the features that your broker provide to you in a real trading platform. All right. So with that, I want to thank Pauline for doing this segment for us, which is how to spot the tops and bottoms of the stock market.
Thank you, Shane. Thank you, everyone. Thank you. Okay, see you.
All right. So for Bursa Academy, this one I think we have shown you already. You can check out, scan the QR code at the bottom, or go to www.bursaacademy.bursamarketplace.com to access the equity trading simulator or gain more insights into through all the materials that they provide to you online. For our next webinar, it is happening on next Monday, okay, which is mengenal pasti struktur pasaran dan paras pembelian yang optimum. All right, so this will be a webinar in BM. So it's happening on 19 September, 8:30 to 10 p.m. So here is the link. Let me share with you again. So yeah, if you want to learn how do you identify the market structure and also where are the possible buy points, so you may register for this segment. All right. So yeah, that's all for our equity trading simulator online workshop today. So thank you so much everybody for tuning in. That is a solid 2 hours that we learned from Pauline about how do we spot the tops and the bottoms of the stock market and how do we use equity trading simulator. With that, have a great rest of the day, and happy Malaysia Day. All right, have a great long weekend. Bye bye.
Okay, bye bye.